This is Market Makers. I'm Sarah Eisen. Federal Reserve Chairman Ben Bernanke is set to speak about Fed's June policy meeting later today, and the futures market is already one step ahead, of course, of the headlines. Dominic Chu has the story. Dom, what is the smart money focused on right now?
Well, I mean, Sarah, let's go to the RBC Capital trading floor to talk to futures specialist Ed Lashinsky. Now, Ed, it seems like the futures market has been all over this, the Fed futures, everything else that's going to be happening with interest rates. Let's talk about why it's important. What are you seeing specifically in the futures market for interest rates like Fed funds, Ed?
Sure, it's great to be on the show with you as well. What we've seen is the market has, with the signal that the Fed had sent a few weeks ago, the futures market obviously has made a pretty significant adjustment, which is in essence mirrored the increase in yields we've seen in the Treasury market as well. And what's happened is that the Fed fund futures market has brought forward their expectations of the first hike from the latter half of 2015 into the first half of 2015.
Now, one thing that you're looking at is the Fed fund futures going out to 2015. Now, I want to show you a chart of this because I want our viewers to kind of get an idea of that. This is the chart of June 2015 Fed funds futures. In essence, what this tells you is as the chart goes down lower, the expectation is that interest rates for overnight lending rates in the U.S. will rise. Is that right?
That's absolutely correct. The price of the futures is inverted to the yield, so it's 100 less the price of the futures. So as the futures price declines, the Fed fund yield is in fact rising, and that gives you an indication of what the market is beginning to think in terms of its forward pricing of when the Fed will eventually begin to adjust policy.
So Ed, as a futures specialist for RBC, what will you be listening for today in the Fed statement and/or Chairman Ben Bernanke's remarks later on this afternoon?
That's a great question. I think two things. One is that in the minutes that are released later, I'm not sure that we're going to see a significant surprise for the market because the message the Fed has communicated, I think, has been, if anything, perhaps communicated a little too clearly, if we want to look at it that way. And that also follows upon later this afternoon. I think there should be some effort made to assuage expectations about how much the market has risen in terms of yields, anticipating the eventual adjustment in terms of the Fed posture.